Greetings, ladies and gentlemen. Welcome to the latest edition of the weekly report for the 12th of January 2015. And as we're talking about finance, must inform you that trading does involve risk of loss, may not be suitable for you. Past performance is no guarantee indicator of future performance. Okay, looking over at the charts now, and it's been a fairly quiet period, as one would expect, on the market since it was probably the start of the this was a couple of days before Christmas there on the 22nd. Market closing at 54.41, and right now as we speak 54.42. So look, there's been a push up and down of about 50 points from here, but by and large at the same place before same market point before Christmas. For those that have been away and want to catch up, there's I suppose the themes, continued themes of weaker energy prices. We've seen crude spend its fourth day below $50 US a barrel, so you've probably seen the flow-on effect there with lower petrol prices, and they might even come down lower from here. The Aussie dollar about a week ago went down to $80. We'll have a look at where it is in a second. Actually, we can look right now. There we go, and we're back above 82.20 as we speak there. It is Monday morning, and you can see that the market is down about 20 points there. So currencies, crude prices, also the Eurozone risk there looks like it's coming back, with the market focusing on Greece in particular. Looking at my reports here, we've also seen US non-farm payrolls. Oops, what's that doing there? US non-farm payrolls showing the US concluded its best year of job growth in 15 years. Unemployment rate dropping to 5.6%. But yes, it is the European stock markets that fell heavily on Friday, which is pushing or is causing the negative bias, and that's what did prompt the initial sell-off about last Tuesday. From which we've since recovered, but on Friday in Milan down 3% there, and in Spain they were down almost 4%. And that was mainly as a issue that the ECB would, or concern that the ECB would come up with a compromised QE program that would be smaller than what they had anticipated or expected. Right, so now that you're up to date with the macro news there, let's have a look at what's changed and what hasn't. Pretty much as you would expect, not a lot of movement in the market. We've sort of had the one step forward pre-New Year and then one step back post-New Year, and we're at break even as mentioned. The highlights, or what has actually changed, is that we were able to take some profits last week on NAB and QBE. Let's just dig up these dates on the 4th and the 5th. Sorry, the 5th and 6th respectively. So let's have a look at NAB first. We had the $33 Jans. This trade we actually only entered on the 22nd of December, which was this day here. No, it would have been the 19th of December, because I remember we did buy around that 32.20 point. So it was a good move, just on the upward tick there, and sold the $33 call options on this rise here, and then we were able to take the profit early last week there. So that was that. There were two lots of people in now. There were those that were in since the 1st of October, so they were holding it for 3 months. So you received 5.4%, and those that just entered just before Christmas, they got 3.4% for about a 2 or 3 week gain or hold there. So good to get some results on the covered call side of things. It's been a bit of a disappointing last 6 months on the market in that regard. And QB is where we're also able to lock in some profits. This one we're holding for 6 weeks, so we wanted to get a little bit more, and we're able to extract 4.5% on that last week. So taking profits around here, and also around that 11:30, 11:40 mark, we're able to lock in the profits there. So with those 2 trades closed and funds back to investors, we did re-establish another QBE trade, buying into the stock at under 11.08 and selling those 11.25 Jans for a yield of 23 cents. So picking up about 2% there. Looking to pick up another 4% for the month on QB. So pretty much just re-entering the same trade on the dip, which was around here, and also entered on Woolworths, which looks like it's finally gathering some traction. Was it? Where do we picked it up? Around $30. So around these 3 days, just under $30 here, and today it's actually looking quite nice at $30.38. So at $30.50 call option was sold on the open there. So ideally, if we can lock in those 2 profits as well. Other than that, not a lot of movement in the other trades. BHP has been a little bit boring, hanging around. Did push up late last week, and even a week ago was almost was threatening $30, but that interest has subsided along with the continued drop in crude prices. Macquarie and AMP are holding steady at small profits, but nothing early to realise there. Looking fairly similar AMP. And as we saw with QBE, that's probably the closest spread that we had. In fact, we were getting rather close to taking profits on Friday. Hit a high of 11.30, probably need 11.40. Look, if you hit $11.40 today or even tomorrow, then that's probably our closest trade to realise at this point in time, which would be nice to see. So that's the update at this stage. I'm sure we'll see continuing themes of Eurozone issues and crude prices weighing on the market, but overall, let's now switch back to the market. Overall, you can see that over the course of the last 12 months, which I've now zoomed out of, we're still sort of mid-range. See, this has been around about the midpoint for the year, so plenty more upside potential. Solid support around that 51.50 mark, but a lot of resistance around 56.50. So the interest on how much lower crude prices and also lower petrol price can flow into the market will be keenly observed, and some observations have been that consumer sentiment is on the up as a result there. So a couple of crosswind themes to push our market around and our economy around in the coming few weeks and months. But ideally, yes, if we can see a continued growth in the market and the share market in particular, then that will be solid, particularly for our covered calls. Right, ladies and gents, I'll wrap it up there, and hopefully we'll have a bit more of an interesting week this week. Able to lock in, ideally QB would be a nice one to lock in on the spread side of things. So wrap it up there and have a great week, and we'll talk again this time next week. Thank you.